Good morning. I'm Josh Hayes, and this is the Market Monitor for Thursday, November 13th. Today, I want to utilize this time to do a little bit of a USDA supply and demand preview. I just got to remember back uh, when it was announced that this report was going to come out tomorrow, Friday the 14th. It was originally, had there been no government shutdown, due to come out Monday, November 10th. In October, there was no report because of the government shutdown. And before the government was set to be reopened, the bill was passed overnight and signed by President Trump last night. So the government is officially back open. But the USDA announced this November 14th report before there was any indication that the government was going to be reopened. And they even pushed the date back, suggesting they were kind of somewhat scrambling to put the numbers together after having been shut down and not planning to uh, submit a report in November. What this tells me, and we got to remember, we got to put all this this timeline back in context. Tells me that they felt the need to get some updated numbers. Now, your immediate thought would be, well, that's bullish. No one I don't think is expecting yield to be increased. So therefore, they must want to get this report out there to get yield corrected. Well, and that would presumably be a bear scenario. There's something going on in the market that they felt was getting out of whack and that they wanted to get this report out there. Well, the market was already trading lower yield. We already had this surge with soybeans from the apparent deal with China. There's all kinds of scenarios that both bearish and bullish as to why the USDA felt something was out of whack, and they want to get the numbers out there to get us fundamentally back on track. It could be that they really do want to lower yield, get ahead of that. They know they're going to have to adjust it quite a bit. It could be that they see that we're trading on lower yields already and that maybe they aren't going to be adjusting yield all that much. I think in the end they will, but that's not my prediction, but it's just pointing out the different scenario. Another thing that could be is they might be in a rush to adjust demand. It might not have anything to do with yield, and the yields might be no surprise today. Most people are expecting at least a couple bushels per acre change with corn and maybe a small adjustment with soybeans. Perhaps they want to show that ending stocks are higher than originally expected due to lower demand. So there's a lot of different scenarios. The one thing I'm fairly confident in is that there's going to be something in the report tomorrow that's going to move to the market, and it'll just have to remain to be seen. I have a guess. I don't want to get too people right up. I do think it has something to do with soybeans. And we'll get to that here in a moment as we start to look at the numbers. So let's start out with yield. The USDA in September had corn yield at 186.7. Range of analyst estimates are for anywhere from 182 to 186 on this report. Not necessarily what they think it's going to be in the end. This is just estimates of what they think the USDA adjustment's going to be. As you can see, no one is anticipating the USDA to adjust yield higher. The average estimate is around 184. We will see tomorrow where they put it at. If you remember last year, there was a small adjustment in November, and then almost 4 bushel an acre adjustment in January. And perhaps we'll see something like that again. If we get an estimate in the 184 range, maybe we'll get something around 181, 180 come January. With soybeans, not as big of an adjustment expected by the industry. USDA was at 53.5 in September. The average estimate for tomorrow report is 53.1. We think perhaps the USDA might even leave soybeans alone for now, although we think they'll end up around 51, 52 when it's all said and done. And we anticipate corn right around the 184 and a half range tomorrow, and at least down to 182 when it's all said and done. So not really anything that the market's not already kind of trading there with yield. So let's take a look at production. You can see no one is anticipating of it's kind of obvious. Obviously, if we expect yields to be lowered, no one is expecting production numbers to be raised. USDA in September, 16.814 billion bushels of corn. The average estimate has that coming down about 260 million bushels. And my soybeans in September, USDA had 4.301 billion bushels, and the average trade estimate has that coming down about 35 million bushels right now. Now, this is where it gets interesting. Let's take a look at ending stocks. This is where the factoring in demand, you can see that the industry is expecting ending stocks to rise in spite of lowered production and lowered yields. The industry as a whole is expecting corn, soybeans, and wheat to see higher ending stocks. The industry has been training this way all year, up until at least now in the last few weeks of soybeans based on the China deal. But the estimates, even despite what we have going on with the market with soybeans, the market still anticipates higher ending stocks, meaning lower yield. Now, this is where opinions vary greatly. So we see that in September, the corn estimate for ending stocks, the USDA was 2.11 billion bushels. The average estimate has that going up about uh, 26 million bushels to 2.136. I'd be a little surprised by that. I think we've had strong exports for corn all year. We've outpaced what the USDA was projecting this whole marketing year to date. I'd be a little surprised to see that number raised. And the range on that, the lowest estimate out there is that we would be at 1.944 million for ending stocks on corn. With soybeans, it's very dramatic. You can see in September, USDA was at 300 million bushels for ending stocks for soybeans. The range of estimates are all the way down all the way down to 187, which would be quite bullish and would not only support what's been going on in the markets here, but would also probably send them quite a bit higher following an important Friday. But then the high end of estimates all the way up to 494 million bushels of soybeans. That jump would absolutely turn the market around on a dime. If the USA posts that number, that would be shocking. Both of those numbers would be shocking. It's quite a huge range. Very surprising to see. Obviously, someone estimating ending stocks of soybeans at 494 is absolutely convinced there will be no sales to China. This is, if you ask me, this is the number that the USDA is anxious to get out there, and why they felt the need before the government was opened to get this report out. I definitely could be wrong, but that's just where my sense is, that they want to get something out there to get the market to be trading the proper fundamentals again. My guess is that the USDA wants to adjust the soybean number because they've had us running at only a 10% decline from the previous year all year long. Well, we've been running about 40% down. So maybe perhaps there's going to be a little bit delay to seeing any benefit from what China's doing. I'm a little leery of that they're going to adjust these ending stocks for soybeans higher. I still believe China's going to buy from us. I just think we're going to have to probably get tough with them again to reinforce some of the things that were supposedly agreed on at the end of October. I can see also with wheat, a small increase is expected for U.S. ending stocks. Now, moving to world ending stocks, you see the same thing. Everyone is expecting ending stocks to be higher across the board. Corn estimate in September, 281.4 billion bushels. Average trade estimate, 282.75. Soybeans in September, 123.99. Average trade estimate, 124.21. Small uptick there. And then USDA September for wheat, 264.06. Average trade estimate, 266.13 now. That's the assumption we will see tomorrow. And like I said, I do anticipate at least something that's going to be set off a little bit of fireworks. My guess would be with beans. Moving on to our typical grain weather watch. A warm up moves east, starting to clear. We had a cold spell come through. Now we're starting to reverse and get a little bit of warm up. A big emphasis on South America. Conditions are still very good in Argentina and remain that way for the next 2 weeks. Brazil has gotten some much needed rain, so soil moisture in the south is good. And they still have some dry spots in the central and north central areas. There is still an anticipation of some level of La Nina that has not yet arrived. That would be forecast to arrive in December. That's something we will continue to watch. And in Russia, they did give some recent rain, but their southern areas need more. Moving on to international cash prices. You can see there with corn, very competitive. It's one of the reasons I don't see why we would have an uptick or a major gain in ending stocks projections for U.S. corn. We've been selling corn all year and running well ahead of the export pace they anticipated. The crop is shrinking. The yields are getting lower. The production is getting lower. Why would we see a big increase in ending stocks? Soybeans, you can see we are higher than Argentina considerably, although they don't have too much to export right now. But we are higher than Brazil, and then you add in the still 10% tariff on our beans from China, and you can see why private companies in China are not buying it from us. It doesn't mean that Chinese government will make some purchases to fulfill that supposed agreement, but they have yet to do much more than buy those initial cargoes at around the time the deal is struck. Still time for that to happen, but it would require, obviously, Chinese government to basically purchase it at a premium from us versus what's available in Brazil. Until you look at wheat, Russia prices in Russia are starting to rise, but we are still not quite as competitive as you can see with Black Sea, Russia, and what's coming out of the Baltic region. 5 minutes single overnight prices. Fairly flat. Beans are still moving up. A lot of technical traders right now. We are in the midst of quite a gap on where technical charts can go. It's just without. I think that's why we need new fundamentals here to really get things back on track. Doesn't mean that this can't go higher. The fundamentals could certainly be favorable to drive us higher. But we definitely need more than just people speculating and trading the technicals. Corn and wheat, fairly flat. If you go back the last 2 weeks, just since the last week on the last market monitor, corn is up 2 since last week. Soybeans up 14 and wheat down 14. Don't anticipate too much movement in markets today and up until 11 o'clock tomorrow on import is issued, and a lot of people are positioning ahead of that, but no one's going to take any big swings until that report comes out tomorrow. That's all for this week. Hope everyone's having a great week. Hope everyone is staying warm, and stay tuned. We'll make sure we get you guys fully updated as soon as the numbers come out tomorrow. We'll get that all distributed along with our analysis, and be ready to act if there's anything that really moves the market. Talk to you next week. Thank you.